Well, inflation for new cars increasing slightly in December from the prior month and still ticking down, though, on a year-over-year basis. But other car-related expenses are seeing big increases. Vehicle insurance, that was up 11.3% on a year-over-year basis. Vehicle maintenance and repairs, that was up 6.2% from a year ago. Joining me now, I want to bring in Tom Donnelly. He's a Mazda North American Operations President and CEO. We also have Yahoo Finance's senior autos reporter, Pras Subramanian, joining us. Great to have both of you. Tom, certainly when you take a look at your numbers and maybe compare that to the numbers that we got out this morning, just specifically on pricing when it comes to inflation obviously remaining very sticky there. You couple that with the fact that we have a threat of tariffs here from the incoming Trump administration. I'm curious just how you're factoring that in, how you're navigating that, and where you see vehicle prices going.
Yeah, great question. Look, affordability itself is one of the significant headwinds facing the entire industry right now. Tariffs, I'll speak to that here in a minute, but we've been, and frankly, we're coming off in 2024, our best year ever. Some of that's product related, the introduction of a couple new products that we've had, and we feel like we're sitting right in the sweet spot in terms of the market. But we've had to make some adjustments in terms of mix and our programs and incentives. We've been able to maintain pricing overall. And again, this has led to our most successful year in our 54-year history here in the US market. We're optimistic about 2025. I mean, the industry is, from a historical perspective, really in a good position, and it's expected to grow in 2025. We expect to grow in 2025. Some of that's product related. Some of that is the introduction of a new brand campaign that we put in place. So we're executing well despite some of the headwinds that the industry is facing.
Hey, Tom, Pras here. So do you kind of attribute some of the success here to product mix? You know, a lot of other manufacturers are struggling with incentives and bloated inventory. What's sort of the Mazda recipe here to sort of get the buyers what they want in this, in last year with the 16.8% growth rate and also in 2025?
Yeah, great question, Pras. So it's a combination of factors. I talked about the product. So just to give you some specifics, for instance, we introduced CX90 about, let's say, 15, 18 months ago. We're selling 2 to 3 times what we did with the prior generation vehicle. We introduced CX50 about 2 years ago. That is an all new model in a segment that we already have a model in. So that's obviously incremental for us. We did about 80,000 CX50s last year. So when you layer these things on top of 2 to 3 times a prior model, an incremental 80,000 units, and then we've grown in each of our existing models as well. It's product, as this industry is largely driven by. We've also completely reimagined our retail experience for our customers. So retail evolution is what we call our image facility. It's open, it's vibrant. Customers really appreciate the environment. Together with our dealer partners, we've invested over $2 billion in the last 7 years to really reimagine this experience. And obviously, we're reaping the benefits of that.
So, Tom, across the product portfolio, I noticed you guys have 3 hybrids on offer. What are your customers saying about the hybrid selection? Are they into it? What's to do with EVs? I know EVs and Mazda have been sort of a slower uptake there. Are you seeing more of that going to come online later on?
Absolutely. So the term that I've used before is intentional follower. Look, we're moving on a pathway towards electrification, just at a different pace. I mean, you see, and we all see where the industry is and some of the challenges in terms of adoption of electrification. Our solution, we call it multi-solution approach. So we introduced plug-in hybrids with the CX90 and CX70. With both of those models, it's representing about 15 to 20% of our sales. In October, we introduced CX50 hybrid, manufactured in Alabama. The market reception to that has frankly exceeded even our expectations. It's our fastest turning vehicle, like 3 to 4 days on our dealership lots. So we think those are the right, call them technologies or powertrains for today's marketplace. In our next phase, which we're just entering now, 2025, we will introduce our own battery electric vehicle as well as additional in our own hybrid system. So we feel like we're timing the market right in terms of the introductions of the powertrains with the plug-in, the impact that's had on 90 and 70, CX50 hybrid, having a full year of that in 2025. we're really enthusiastic about what the outlook is and the contribution those vehicles are making for us.
Tom, drilling down a little bit more just in terms of what these tariffs ultimately mean for your business. What does it mean for one, pricing, and then production changes?
Absolutely. Well, look, any business desires predictability and policies that will help stimulate a vibrant economy, right? So that's understood. What we're looking for, and you know, we've been scenario planning for the last few months, even pre-election, of what our possible actions could be. You know, we have a manufacturing plant in Alabama, we have a manufacturing plant in Mexico. But what's clear is no business in any industry can absorb the magnitude of what's being talked about here. So we have some optionality in terms of ramping up Alabama, where we produce CX-50. But as you both know, that takes time. I mean, we have a supply chain that allows us to consider those things, but these are decisions that take, have a months to potentially year time frame in terms of the adjustments you make. From a pricing perspective, we haven't gotten there yet. We'll see what the final outcomes are, but we feel like we have some alternatives that will allow us to maintain our momentum heading into 25 and beyond.
Tom, is it tougher to do business potentially here under a Trump 2.0 administration, just given the fact that you don't have as much predictability, what you were just talking about there?
Potentially, but if I look back over the last 5 years, historic level of challenges, not just for automotive, but for any industry. We've grown 50% over the last 5 years. So you think about COVID, you think about chips, you think about the supply chain disruptions. I mean, last year, I already mentioned, was our best year ever, but we've grown 50%, more than any other mainstream brand in the industry. Some of that is our size. We have agility that perhaps others others do not have. We have a great relationship with our dealer partners where we're absolutely aligned on how we go to market and the actions we take. So that uncertainty isn't beneficial, but we feel like we're still going to be able to make the moves necessary to continue our momentum.
Hey, Tom, you talk about sort of Mazda's flexibility, you're more nimble than the other competitors. You also have Honda and Nissan merging, making a Japanese giant here in the US and internationally. How does Mazda sort of compete with that? And then do you think that mergers are the path forward for a lot of the automakers?
Yeah, no question. That's big news in any industry, certainly in ours. I mean, that's indicative of a lot of the headwinds that the industry is facing. And you talk about electrification and the investments that are required there. Frankly, what I would term the unrealistic regulatory environment that the industry is facing on that pathway towards electrification and other things there. So there are some massive headwinds that are once in a century things the industry is facing. The approach that Mazda is taking and has taken and it has been around partnerships and alliances. So for the brand you mentioned, they consider that the right pathway for them. For us, it's about strengthening those relationship that we have with Toyota, Panasonic, Energy. So great, strong relationships that allow us to and have contributed to the success we've had over the last 5 or 6 years, as I've alluded to.
All right, Tom, thanks so much for taking the time to join us. And of course,
My
our
pleasure.
thanks to Pras as well.